What is fundamental analysis? Fundamental analysis is based on assumption that share price depend on future dividend. So dividend is the most important thing in the fundamental analysis. So economic analysis, industry analysis, then we come the company analysis. Three things we do in fundamental analysis. What are the things? Economic, industry, and company. CIE, 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 CIE. Company, economy, industry. What is economic analysis? The factor affecting economic analysis are the growth rate of national income related measure, country inflation, and country's growth. Growth rate of industry sector. Which sector it is there? Industry, finance sector, banking sector, commercial sector, and then automobile sector, service sector. Which sector? How it has been affected? Inflation. So prices increase in gold price. Monsoon, what season it is? So drought season, summer season, winter season. So which season is there? So technique used in economic analysis usually. What are the indicators that uses the assess performance of economic? So some of this techniques has been used. What is anticipatory surveys? So some surveys will be there. We can anticipate that. Barometer indicator approaches. Some approaches there. That is barometer approach. So this is the barometer. In the scale, this is in this level. So this is the benchmark. So we are comparing these two. So this is the indicator, a barometer approach. Indicators has been classified under a leading indicator, a rough coincident indicator, and lagging indicator. Leading indicator, na top leading company, we will see what is that growth and what is our company growth. So compare that. And then a rough coincident indicator. So we will see, sir, we will see the balance sheet and we compare with how same balance sheet is there with any other company's balance sheet. If they are being similar and how that history is being there, as such, this company history may come coincident, similar like twins. Lagging indicator is a company is slow, falling, or it's been negative. So on the negative approach, we compare with that. That is lagging indicator. Economic model built approach. This is a formula model through which we will develop a model that is based on the economics of this, considering inflation, considering society, considering culture, politics, everything is being get into, and through that we will get into economic model building approach. Through that we will get this economic analysis. Second, industry analysis. What does industry analysis is? The factors affecting industry analysis. What are the factors that affect the industry analysis? Product life cycle. Product life cycle have four stages: embryonic stage, growth stage, maturity stage, decline stage. So which in it is there? Demand supply cycle. We will see demand supply. So we will see demand is increase, supply is increasing, demand is decreasing, supply is decreasing. So some kind of thing we will have. Barrier to entry. Oh, what is a barrier to entry? Anyone can come in and do the business, or what is licensing is there? What is the government regulations? Government attitude. How government is accepting this business? Whether the government is okay with we are earning more profit. Economical policies, climate policies, uh, tax policies. These are all the policy we will see for government attitude. Technique used to indicate industry analysis. What are the techniques? Indicators used as the performance of industry as follows: regressive analysis and input output analysis. What is the regression analysis? Regression is we have some data. This data will be compared with this data. If both have any problem or there is a mismatch with this demand and supply, product life cycle, barrier entry, government attitude, then we can say that. Input output analysis is like how much input money flow in and money flow out. What is the profit we gain through this analysis? So what is the effort we put in? What is the gain we got in? So such kind of things we are seeing. This is industry analysis. Company analysis. What is a company analysis? The factors affecting company analysis. Net worth, book value. So net worth you will see. In book value you will see. What is the book value? As per the balance sheet, what is the value? At the same time, what the market value will see. That is also there. Sources, use of fund. So we have share or debentures or loan. How you got this fund or credit as growth record. So what is a growth record? Sales we will see, profit EPS earning per share we will see, then dividend we will see, financial analysis. All the ratios we will put into it. This is ratio financial analysis. Techniques used in the company analysis. What are the technique indicators used to assess performance of the company as follows? Decision tree analysis. Decision tree. This is kind of decision tree analysis is there. Trend analysis. We will put into it and we will see what is a trend we will see. Correlation regression analysis. We will put a formula on that based on the formula. What is it happening? That is correlation regression. How it is matching. These are all the things you will see to get this data. This is all we need to know about company analysis.